Do you have any special talent?
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great day today. Now, in yesterday's video, we had a lot of warning signs, a lot of imminent recession talk, right? However, what I did say was I was anticipating a bit of a relief rally. I said I wouldn't be shorting these levels because, as we can see right here, we are retesting the bottom of this upward sloping trend. Now, this trend started all the way back in the beginning of this year around January 22nd, and you could see that there have been multiple touches of support down at this level. And currently, we actually are above all three of these resistances, which is why I said if you were looking to trade this pattern, I wouldn't be shorting it. It would be an opportunity for a long, and my target was actually up here at around this red line, right around $44,600. So I am still anticipating that to happen. Now, it may not happen overnight. Obviously, of course, we could rally up a little bit, find some resistance right here at this same level, maybe come back down, retest around the $40,600 level. But ultimately, I am anticipating an uptrend in the short term for Bitcoin. Now, why is that with everything going on right now? Well, we are going to talk about that in today's video. Now, we do know that there is a possible recession that is imminent. However, there is one person in the crypto industry you might be familiar with who actually thinks that a recession could be good for Bitcoin. Now, I know that sounds like some Bitcoin maxi talk, but there is something happening right now in the Bitcoin chart that we need to talk about that has only happened 3 times before. It is happening again right now, and the last 3 times that it did happen was in fact bullish for Bitcoin. Now, I know what you're saying. We did see some data that was showing that the whales were selling. However, it was only a small percentage of the whales. So we are going to talk about who is still holding, why a recession could potentially be good for Bitcoin. There is some on-chain data we need to look at, and there is one specific metric that we need to pay key attention to that has been a deciding factor for the Bitcoin price pretty much throughout the history of Bitcoin's existence. So we're going to talk about all that today. If that sounds good to you, we're going to talk about what we can expect from the Fed, how this could actually be good for Bitcoin, and ultimately what is going to drive the Bitcoin price. So if you want to hear about all that, stick around to the end of this video. Make sure you get subscribed if you're not. And of course, if you are looking to trade, if you did take this trade, congratulations from bottom to top right here. You can see Bitcoin has actually made a 5.5% move. So I don't know if you guys are using leverage, if you're using 5%, 5.5%, 25% move. Pretty good. If you guys are interested in learning how to trade, make sure you check out the tutorial popping up above. There are links below. But also just get subscribed, watch these videos. I always go over everything that I'm looking at every single day. And as you guys can see right here, we are still in this upwards trend, right? We have been putting in higher highs, right? Every single time, higher high. This was kind of the same high, but this was a higher high right here. And obviously we've been putting higher lows, higher lows, higher lows. And as expected, we did have the bounce. So this is why I said, even though this chart may look bearish on the short, in the ultimate structure of it right now, short term, we were looking for that relief rally. So really, if you just kind of break down these channels that Bitcoin has been trading in, I actually just made this chart last night. I think we have enough data to sort of see where Bitcoin's been bouncing around. You could see that we actually bounced off of this trend line right here, which actually started as this resistance way back here in June of 2021. And look at this, we couldn't break above it here. Every time we did, we had massive moves. And right here, guys, we just officially hit it as support. So I do think, like I said, short term, we are looking for a rally. My target is $44,600. Doesn't mean it's going to happen today or tomorrow, but I do think we get to that $44,600 level before reassessing the situation. Maybe we do pull back after that, but you can see there is a lot of demand in these zones. If you look at the VPR behind me, I'm not sure if I'm blocking it, but you could see essentially once we get above this sort of $39,300 level, which we did just have a bounce off of. You can see that we have another point of demand right around 43,600 and then another main area around 47,000. So essentially, if Bitcoin does get to that $44,600 level, which I am anticipating we do hit at some point, then we are going to probably, if we can break through that, we're going to see a lot of interest around that $47,000 level. That may even be one of those areas where you do find some of these bigger players offloading some of their bags. But today's video, I mean, we could focus on the short-term price action all day. And in all honesty, guys, the last two calls that we made on this channel, the CME futures gap and the bottom of this, have been good calls. I'm not one to toot my own horn and, exactly as predicted. But ultimately, if you just look at the charts, you see what's going on. You can see that there is buying. There are buyers that are stepping in. If Bitcoin was truly just this garbage risk-off asset that nobody was interested in owning, then how come every time Bitcoin comes down to these levels, we see buyers stepping in? We see volume coming in, right? And having a look at this chart right here, very, very simple. A 5-year-old could see what we're talking about here. Essentially, if we take the top of this trend from the top of the peak that we had the 20,000 top back here, right back here in 2017 right here, and we also take this top that we had right here in June of 2019, which you could say this was kind of like the mid-cycle rally, and we extend these lines out, which is exactly what I've done right here. You could see massive inflection points of support, right? Look at this, right where these two lines start to intersect, we do have that capitulation right here, here, but ultimately we do have that support. And you can see right here, Bitcoin has been really, really supported by this level. In fact, this wick really technically didn't even come down to that level, which is telling me that someone, somewhere, institutions, Wall Street, countries, I don't know, but someone is salivating over these prices. Someone is getting very excited every time Bitcoin comes down to these levels. They keep front running it, right? Every single time we put in a higher low, which means they're not letting the price get down to as low as it was the previous time. In my opinion, even though you could say, well, this is somewhat bearish. Really, ultimately, Bitcoin has been in this massive year and 3-month accumulation area. We're basically at the exact same price that we were sitting at back in January of 2021. And ultimately, all this has been is just a giant accumulation, redistribution, Wyckoff, whatever you want to call it. But I do think that once we break out of whatever the heck this sideways crab market is in, we are going to shatter the top of this right here. And you could see that ultimately at some point, you are essentially looking at Bitcoin. I don't know how it's going to do it. I don't know if it's going to come down here and fake people out. But ultimately, I think we're going to retest back up here and put in a potential triple top, not necessarily in a negative way, but I do think at some point we're going to see Bitcoin getting back up to around the $72,000 to $75,000 this level. And that was my call that I had made months ago. And some people were laughing, saying, oh yeah, we're going to go to 75,000. Meanwhile, we're dumping. It's like, we're not really dumping. We're dumping on the daily. Okay. But look at this, guys, right? We had this massive dump down here, came all the way down to 27,000. And even if you take it from the lows right there to where we are right now, Bitcoin is still up 44.5% since the bottom. So yes, we're down from the top. Okay, what are we down from the top right now? Let me get my tool out again. What are we down from the top? All right, so we're down 40% and we're up 45%. So really, we're just ranging in the middle. I would think to myself, if this wasn't bullish, wouldn't we have dumped harder and lower at this point? You let me know what you think. Maybe I'm being a little too optimistic right now, but I want to go back to these Fibonacci levels. Remember we had talked about that video where we showed the 1.68, the significance of that level? The 1.68, and I'm not going to go all the way back historically because I already did this in a video. I went through all the cycles. If we just take the past 2 cycles that we had right here, so essentially what you do is you draw it right here from the top where we had the original pump where Bitcoin, this was back in December of 2013. 2013, imagine this, by the way. Bitcoin hit $1,280 and some people bought there. And then Bitcoin fell all the way down to $166. They were wrecked. They were pissed off. They thought it was over, only for it to pump all the way back up to 20,000. So don't get chopped up in these intraday moves. Essentially taking this right here, Fibonacci retracement back to the bottom. What do we see happening right here? Right here, we had this massive peak back in June of 2017 where the Bitcoin price perfectly, by the way, hit this level right here, perfectly hit the 2.618, came down to this blue zone being the 1.618. And what did we do right here? What did we do right here, guys, right? We had that resistance right here. We came down, we had support on the 1.618, and we continued upwards. Now, this was sort of, you can argue, before we had the big institutions, right? We were looking at 4-year cycles. Bitcoin was obviously a lot faster. bigger moves in shorter times. We're not seeing that today. What we're seeing is a lengthening cycle. We're seeing Bitcoin actually be very correlated with the NASDAQ and the S&P and all these other stocks. But at the same time, this correlation is also making Bitcoin, I don't want to say less volatile, because really traditionally this is still a lot of volatility. But for us hardcore crypto Bitcoiners that have been in it for 5-6 years, it's kind of been boring. It's been very boring, right? So going off that same thesis right here with the 1.618, what do we see when we actually take the top right here from the 20,000 and we bring it all the way down? Well, we get this, and I drag this all the way out, and look exactly what we're doing right here, guys. What are we doing? We are finding, we did get above it, but we found some resistance right here currently recently at the 2.618, and look what we did, the 1.618 right here, guys. Look at this. We had that same support. Look, we had some support here. Now, I'm not saying we can't wick down into it. There's always those capitulation wicks, you know, people just market sell, and of course that crashes the books. But what are we seeing right here? Same bounce off of that, right? We had resistance at this next Fibonacci, and of course right here we are seeing an uptrend. We have not even come down to this level. So it would be very unlikely, in my opinion, that Bitcoin falls below $30,000 and stays there for any sustained period of time, despite a major black swan event happening. Only thing is, right now, what black swan event is really going to happen? We've had the war. So we've had a war, we've had the pandemic, not really going to surprise us if any variants come out. We've seen inflation, not really surprising. We're expecting the Fed to raise rates. That's not really surprising, right? Unless they come out with some crazy 5% increase. Other than that, not too surprising. And as we pointed out, when you look at the difference, as soon as we break through right here and we talk about diminishing returns, you do have 4.236, sorry. And up here, we had about a 311% increase. So, even if you look into diminishing returns and you assume that maybe we'll only do half of that, maybe we'll do only half of what we did last time. Well, even so, breaking out of this level, coming up to about a 150% puts Bitcoin at around $180,000, which was exactly what we talked about in yesterday's video. Analysts were calling for it. I was calling for it. I still expect $180,000 Bitcoin by the end of this cycle. When is that cycle going to be? I don't know, guys. I have no idea. The whole 4-year cycle has shifted, but it's really difficult to be bearish, especially also when you've seen the super guppy actually move into the neutral blue zone. We've come out of the red zone, and we do know that historically when we tend to do that. Now, of course, if you really want to nitpick, obviously if we come back here, to the major dump that we had, which, by the way, just pointing this out, Bitcoin went all the way up here, down here. So how much of a decrease did we have? Just because I want to be realistic here, 70% decrease before entering in the red zone. 70%, okay? We came down, we had a little bit of fake out, and we continued to the downside. That's not what we're seeing right now. We're not seeing Bitcoin in a downtrend, guys. Does this right here, okay? Does this look anything like this area right here? This is a clear downtrend. We are trending downwards. This is a bear market. This is a bearish trend. Right here, we are not trending downwards. In fact, we're putting in higher lows and higher highs. This is a completely different market structure. And I know what you're saying. Well, what about everything that's going on right now, macroeconomically, globally? We're going to get to that in a little bit. Definitely stick around. Make sure you don't turn this video off, because you're going to get a lot of value out of it. Now, the DXY, the dollar index, is obviously something that has been inversely related to Bitcoin. When the dollar's pumping, the dollar's getting stronger, you see things like Bitcoin sell off, even things like gold sell off, right? Because people move into the dollar because the dollar is showing strength. And that's what people are afraid of. If they do raise these rates, if Jerome Powell comes out and he does tighten and he stays hawkish, then this is not good for Bitcoin, right? Well, that's what you would think, but that's what we're going to talk about in a minute. But ultimately right here, if we actually take this level of resistance on the DXY dating all the way back to 2015, essentially, we have resistance here, we have resistance here. Look at this, slight breakout, tried to flip its support, dollar absolutely crashed. What did we do again right here? Had a little bit of a breakout, dollar tried to break out of it. We did have that breakout, right? Everybody got scared. Then what did it do? Dollar crashed. What are we doing right now? We're having resistance at that area. So one of two things is going to happen, in my opinion. We're either going to have a rejection. We're going to come back down to about 97.7, which is going to be very good for Bitcoin because they have inverse relationships. Or what's going to happen is the same thing that happened the past 2 times. We break out of here. It's a failed rally. Everybody thinks it's over. Bitcoin starts falling. Everybody panic sells. And what happens? The dollar comes back down and crashes lower again. Because we know ultimately, no matter what they try to do, no matter how much they try to raise rates, no matter how much they taper, it It doesn't work. We have decades of history in the US alone that shows they are never going to be able to get this inflation under control. They just can't do it. It will collapse the economy. The US is not going to allow that to happen, and they are not going to stop bailing out their friends in Wall Street, which is why right now, if we have a look at Bitcoin, simply, the 5-year-old can read this chart. We are just bouncing around in these areas. So for people that are freaking out, it's the same thing as, going from this area down to this area, or this area down to this area. We did the same exact thing. Or even if you want to go back here, look, it's been the same thing. We hit this, we come down, we come down, we come down. But what are we doing in the process? We are putting in higher high, higher high, higher low, higher low, okay? So this is why I still think minimally we're coming, around here to this level, right here, okay, which I do believe we're still going to hit between $44,600 and $45,000, right? Now, one thing that's happening right now, like Will Clemente pointed out, is that there were only 3 other occasions that we have ever seen this much Bitcoin getting withdrawn from the exchange. Now, you can surmise all you want what this means. Maybe it's OTC. We can't see what's going on in the background, but what I could see based on this chart is that there's not a lot of liquidity. Now, keep in mind, a lot of people that look at these charts and, are very bullish about a lot of Bitcoin being taken off exchanges. Now, in theory, it is a good thing because it means that, or at least we can assume, right, that people are hodling. Whales are hodling. This is why they're taking it off the exchange. But in the other hand, you're also making the order book thinner. So the less Bitcoin on exchange means if there is a big whale that does want to come in and does try to sell, they're going to crash the price because the order book is so thin. So you have to take it with a grain of salt. But what you can see, historically speaking, is the last 3 times that we were down in these levels, down in this blue zone, what happened right here in May of 2020? Look at this. Bitcoin started pumping. What happened here? Between September 20th and January 21st, Bitcoin started pumping. What happened right here? Around September of 21, Bitcoin started pumping. And what's happening right now, today? Well, Bitcoin's kind of pumping today, right? So is this the start of this? Does this mean, and keep in mind, they could take a little bit more off. We're not like totally down. I mean, back here, we saw this even dip out of this blue box territory. But up here, we are looking at a potential relief rally. So I wanted to turn this over to Alex Mashinsky. He was over at the Bitcoin 2022 conference, and he had his input to say why he still believes Bitcoin is the place to be. He talks about inflation and the Fed, and they say, well, isn't that a bad thing? But check this out, guys. This is actually what he had to say.
I get your point that Bitcoin is seen as a hedge against inflation, but at the same time, this high inflation leads to tighter monetary policy, which could potentially push the U.S. into a recession. Yes. How do you see that playing out for Bitcoin and crypto?
It's a great question because I normally say don't fight the Fed, and for the last several years, don't fight the Fed meant buy stocks, right? But on my AMA, I announced 2 weeks ago that I sold all my stocks because fighting the Fed now is owning stocks, owning equities, right? So if you don't want to fight the Fed, get out of the way, right? But we're seeing separation of Bitcoin. So from the beginning of the year, the stock market is down. But Bitcoin is actually recovered most of its losses. So we're seeing bifurcation, we're seeing separation, meaning Bitcoin is finally starting to behave as a safety asset. And that's why, again, I'm selling my stocks and I'm buying more Bitcoin.
We were seeing tremendous correlation between Bitcoin, the crypto market, and tech stocks. So you're seeing that correlation end.
I'm saying I've been interviewed on Kitco now for 2 or 3 years. I've been saying for that entire period that the two are correlated and we should not expect separation for any time soon. But now I'm saying there is separation. It's time for separation. Why? Because the Fed is putting a lot of pressure on the economy by hiking rates and doing basically, instead of putting liquidity into the market, taking liquidity out of the market, all of that with us shutting down the 9th largest economy in the world, Russia, we basically effectively shut it down. That's a huge recessionary pressure on our economy. So I do expect a recession next year, 2023. I don't think there's anything the Fed can do. We will have a recession next year.
So to be clear, you believe that there will be a recession next year.
Yes.
Therefore, you've gotten out of equities, but you still think that this is good news for Bitcoin and the crypto markets?
Yes. So I think Bitcoin and Ethereum are going to do very well.
In this recessionary environment?
So from now to the recession and during the recession. Yes. Because basically we have a bridge between TradFi or traditional finance and CeFi, and then another bridge between CeFi and DeFi. And those bridges are now being built and being expanded on, right? That's part of what Celsius does. More and more money is going to flow from traditional finance into CeFi and DeFi because it's going to escape. It's going to escape TradFi, right? There's nowhere to put money in. All the assets are inflated, right? Real estate, bonds, stocks. It doesn't matter. You can't hide anywhere. Even if you want to buy commodities, most commodities are at all-time high, right? So where are you going to park your money? So the best way to do is to move it over to an industry that is not correlated to the US dollar.
And you're seeing that lack of correlation increase. So David loves to ask the price outlook question. So what does that mean if you're seeing all of this money now flowing out of all of these other assets and into cryptos and Bitcoin? I guess let's start off with your Bitcoin price outlook.
So I think we're definitely going to hit all-time highs. All-time highs are not that far from where we are. It's $67,000. And the question we don't know is what happens afterwards. How much resistance we're going to have at 70, 80, 90,000. I think we are going to break $100,000. I know I've said that last year, but we had a few macroeconomic events that are basically kicked the can down the road. But we will see Bitcoin over 100,000 this year.
But obviously one of the biggest problems is if we don't have any new participants into the space, we're essentially just recycling the money, right? We need money to come from the outside. He actually says this in the next clip. But the one thing that they ask him specifically, and I'm going to start from that part, but he says they ask him, what do you think is going to actually truly drive the Bitcoin price? And this is what Alex had to say about that.
Listen, so Ukraine, you talked about Ukraine. Why haven't we seen the price of Bitcoin move up on the invasion of Ukraine? You mentioned that Bitcoin is a safe haven asset. You mentioned that it could do well in a recession, yet when risk assets have fallen on heightened geopolitical tensions, Bitcoin just hasn't done that, at least in the last 3 months. Performed as well as you might have expected. So what could be different next time?
Yeah, so Ukraine, by the way, announced that they are supporting Bitcoin. They passed a special law for that, and they made it effectively legal tender across the country. Many of their banks are closed or there's no money in the ATMs. So they definitely are looking to use Bitcoin to expand liquidity and services in the country. But as a country by itself, it's not enough to create this tremendous momentum, right? Bitcoin now is over $1 trillion, and it needs to lift the $1 trillion asset. You need a lot of inflows, right? So when Luna is buying Bitcoin or other people are buying Bitcoin, those are movements inside of the crypto community. What you need is fresh capital from TradFi coming in and buying Bitcoin. That's what's going to drive the price higher.
So let's go back to Terra Luna, because one of the policies there that Dogecoin is trying to implement is to have Bitcoin as a reserve asset, if you will, for the platform. Do you see other protocols and platforms taking that approach? Do you see Bitcoin as a reserve asset, if you will, for other platforms and protocols?
Yeah, so it's a great move by Luna to diversify effectively their treasury, right? So instead of relying just on their own token or their own currency, they're now adding Bitcoin as another reserve asset, which is going to make the people who use UST much more comfortable that there is a stopgap in case prices do go down, right? And that's what they were worried about. So UST is a synthetic stablecoin, right? It's only attached, it's only based on what is in the reserves of Terra Luna. And I think many other people will copy Terra Luna and use the same mechanism again, which is going to drive the price of Bitcoin even higher, right?
Right.
So Bitcoin dominance is going to increase.
Also, side note, just super quick, unfortunate news about Celsius is that they are cutting off their services as far as their APY for US citizens. Not a surprise, right? And, like Russell Klein pointed out, there are two Americans. One has a net worth of $5 million and makes $250K a year. One is in debt and makes $40,000 a year. Now, when they send their Bitcoin to Celsius, only one of them will earn passive income on it. Guess which one? We live in a regulatory clown world. But guys, they're just trying to protect you. They're just trying to protect you. All right, so I just had to bring that up. But let's talk about a little bit of the negatives. I want to have a balanced view on this. So according to Ollie charts over here, on-chain data has been showing that Bitcoin whales are selling or at least redistributing. We don't really know what they're doing. Over the past 4 days, the number of addresses on the network holding over 10,000 Bitcoin has declined by 4.6%. Downwards pressure, he says, could push Bitcoin lower. Now, while this does seem pretty terrible, keep in mind it's only declined by 4.6%, okay? And the other thing I wanted to talk about is that Santiment had pointed out that Bitcoin is seeing a continued steady supply of 4,000 whale transactions exceeding $1 million throughout the week, a little bit slower on the weekends. Large increases are what we are looking out for to foreshadow a price bounce, a price rebound, right? But look at this, guys. You can go over to onchain.com, and this is essentially the HODL Waves, right? And really all it shows is how long massive amounts of Bitcoin haven't moved in what time period. Now, you can see this chart right here. You can slide it. It's an interactive chart. And, as we get closer, you can see this purple area up here increasing. Now, I know what you're saying. If it's over 10 years, it's probably Bitcoin that's been lost. Fair enough. Forget the purple. We won't even look at the purple. Maybe we won't even look at the blue. How about we don't look at the blue either? But what we are seeing down here is an increase specifically in the 3 to 5 year area. Now, I don't think everyone lost or misplaced their Bitcoin in the last 3 to 5 years. I got into crypto 6 years ago, and it was common knowledge to save your key, be careful. We heard these horror stories. So I would say that anybody in crypto in the past 5 years, I would say 5 to 6 years, they know what they're doing. They're not idiots. If they're holding because they want to, not because they forgot some Bitcoin. And you could see that these waves have actually increased from the COVID crash down here of around 5.6%. And currently, we're sitting at around 15%. So that's a 3x increase from where we were during the COVID crash. So obviously, there is some conviction. And what we're seeing is a lot of these whales, even these newer retail participants, the ones that are selling are the ones that have gotten in recently. The ones that maybe they are some new Wall Street guys that just dabbled their toes in Bitcoin, and now they're freaking out because their portfolio's down 45% as far as Bitcoin's concerned, and maybe they are freaking out. But for the rest of us, for the smart ones, for the people that have been in the space for 3 to 5 years, and even look at the 5 to 7 years, 3.49%, 10 to 7, 6.71%, 2 years, 6%. In other words, point is you're seeing these values increase, which is showing me that the long-term holders have conviction. They're not selling. The whales that are selling now, like I said, maybe they just got in recently. I don't know. Somebody do chain analysis on it. Tell me if I'm right or wrong. But ultimately, I still remain bullish on Bitcoin. And once again, just ending on the simplest of simplest charts right here. You can see, and I even put it down here if you guys really want to count this wick. The only reason that I included this wick is because let's just say over the next week, Bitcoin bounces around this area, and then we get back down to 40,000, and then all of a sudden, we have this crazy wick down to 36,000, right? I'm not saying it couldn't happen because look, we had it here, right? We had it here. So could it happen? It could happen. They could try to flush out the longs, maybe try to catch some traders off guard. But what ended up happening at the end of the day? Boom. Keep in mind, these are daily candles. So in a day, Bitcoin went from 34,000. Everyone freaked out. Closed the daily candle right up here. Actually, I can't see what I'm doing. Closed the daily candle up at around 36,600. We dumped down here. Bitcoin hit 34,000. Where did we close the daily candle? 38,000. If Bitcoin was to dump down here, let's say, maybe we come down to 36,000, most likely close the daily candle back above 40,000. So don't be freaked out about these smaller moves. I do anticipate some resistance again, sort of like I said, right here, around that 44,600. You can see it's kind of been a little bit of an area. Once we got above it, we did have that nice breakout. So just be careful if we come up to that area right around 45,000, maybe even a little before that, we might see some selling pressure. If we do break up above that, then we have that VPVR, the next area around 47,000. But ultimately, guys, it doesn't really make sense to be bearish on Bitcoin short term unless some really ultimately terrible, horrible news comes out. Don't underestimate the probability of this wick, right? They might want to try to catch the traders off guard. That's what they do. They liquidate them to the upside. They liquidate them to the downside. But ultimately, we are building this structure, and I do remain bullish on Bitcoin. So if you do enjoy these kind of updates, drop me a comment, drop me a like. I do like to hear from you guys. Thank you so much. Make sure to follow me over on Twitter at the CryptoZombie. And yeah, I think that's it for me today. So I hope you guys are having a wonderful day. Thank you again. If you stayed all the way to the end of the video, you are a trooper. I love you. You're why I make these videos in the first place. And like I said, if you are looking to trade, you know, you can set up an account on any of those. Takes 30 seconds. Just put your email in. $8,000 in bonuses, 50% bonus on your Prime XBT deposit if you're interested in that. Bybit, Femex has $10 a month trading. Unlimited trading for $10. You don't have to pay fees for all your trades. Check that out below. And if you are interested in trading responsibly, profitably, check these videos popping up right here, right now. Until next time, stay crypto. And of course, peace out.